Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what's really going on behind those fancy corporate filings. And let me tell you, Great Elm Capital Corp has a little something brewing that might be more interesting than a surprise dividend. Now, if you're new here and love getting the real story on companies directly from their official reports, make sure you hit that subscribe button. We also have a growing community on Discord, link down below, where we break down these filings even further. So what's the big deal with Great Elm today? Well, it seems like they've been busy offloading some shares in a significant private deal. So what exactly happened here? Great Elm Capital Corp, or the company as they call themselves, announced on August 27th of last year that they entered into a stock purchase agreement. Think of it like a private handshake deal to sell a chunk of their company. They sold a whopping $1,090,000 shares of their common stock, the basic ownership slices of the company, for 11.64 cents each. That adds up to a sweet 15,028,000 shares of their common stock. The basic ownership slices of the company for 11,290,000 shares of their common stock. The basic ownership slices of the company for $11.65. In cash for the company. Who bought these shares? It wasn't some big institution, but a company called Paul Richard LLC, which is apparently connected to someone named Booker Smith. They bought these shares in a special kind of sale called a private placement. This means they didn't have to go through the usual big public song and dance that companies normally do when they sell new stock. It's like selling a house directly to a neighbor instead of listing it on the open market. Now here's where it gets a bit more complex, but it's actually pretty important for people who bought these shares. The agreement includes something called registration rights. Basically, Great Elm Capital Corp promised to file paperwork with the government, the SEC, to make it legal and easy for these new shareholders to eventually sell their shares to others in the future. They have to do this within 150 days of this deal. It's like promising to get your new car registered so you can drive it legally. These rights disappear though if the shares are sold in a regular way, like through a recognized stock trading rule, or if the company sorts out the paperwork for them. This whole transaction is so important they even have a separate section addressing it, labeled Item 3.02. It just reinforces what we discussed in Item 1.01, basically saying, hey, we sold some stock without it being publicly registered, and here's all the context around that. It's a more technical way of telling you about the private sale we just covered. And because this is a pretty big event for the company, they also issued a press release about it. This is pretty standard practice. They want to make sure people know what's happening. The press release is attached as an exhibit, Exhibit 99.1, so you can go read the official announcement if you're really curious. Let's quickly look at what Great Elm Capital Corp actually has listed on the stock market. They have common stock, which is the most basic form of ownership with a par value of just 1 cent. This stock trades on the Nasdaq Global Market under the symbol GECC. Beyond their common stock, they also have various types of debt, like bonds that they've sold to investors. For example, they have these 5.875% notes due in 2026. Think of these as loans from investors that the company has to pay back with a specific interest rate by a certain date. These are also traded on Nasdaq under the symbol GECCO. Then there are their 8.75% notes due in 2028. Again, this is the company borrowing money, this time at a higher interest rate of 8.75% and promising to pay it back in 2028. The ticker symbol for this one is GECCZ. They also have 8.50% notes due in 2029 with the symbol GECC. This shows they are raising capital through different debt instruments with varying interest rates and maturity dates. And finally, they have 8.125% notes maturing in 2029, traded under GECCH. Issuing different types of debt like this can help a company manage its financing costs and align repayment schedules with its cash flow. And who signed off on all this? Kerry A. Davis, the chief financial officer, put their name on it. This is typical for financial reports showing that the CFO, the top financial person in the company, has reviewed and approved the information. Now, let's put on our investor hats and look at this whole thing. We got a private sale of over 1 million shares of common stock. The company received over $15 million in cash. This is good for immediate liquidity, meaning they have more cash on hand to operate, invest, or pay down other debts. The fact that it was a private placement exempted from full public registration suggests they were aiming for a faster, perhaps more discreet way to raise capital, and the inclusion of registration rights for the buyers is standard practice to make these private investments more attractive, as it provides a path to liquidity for those investors later on. The different debt instruments, the notes due in 26, 2028 and 2029, with their varying interest rates, tell us a story about how Great Elm Capital Corp is financing its operations. They're using a mix of debt to fund their business. The 8 times 75% notes due in 2028 are pretty high interest. This means they're paying a significant amount of money just to borrow that capital if their investments aren't generating returns. Significant amount of money just to borrow that capital. If their investments aren't generating returns significantly higher than these borrowing costs, it can really eat into their profits. A healthy company can manage these kinds of debts, but it's a constant balancing act. Looking at the strategy, this private placement could be a signal of a few things. They might be raising funds for a specific new project, an acquisition, or to strengthen their balance sheet in anticipation of market changes. Without more context from their regular financial reports, like their quarterly 10Q or annual 10K filings, it's hard to say exactly why they needed this cash, but it's a significant amount. The structure of the deal with registration rights shows they're being attentive to the needs of their investors. So, what's my take on Great Elm Capital Corp? Based on this filing, they are actively managing their capital structure, raising funds through both private equity sales and various debt issuances. The private placement brings in much needed cash, and the registration rights are a good sign for investor relations, ensuring those new shareholders have a way to eventually liquidate their stake. However, the varying interest rates on their debt, especially the higher ones, are a point of attention. They need to ensure their business operations are generating strong enough returns to comfortably cover these borrowing costs. The direction seems to be growth and strategic financing, but the cost of that financing needs constant monitoring. Alright, that's our breakdown of this Great Elm Capital Corp filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.